All right, so welcome to lesson 13. And in this series, we're going to be talking about correlation and divergence and why it's important for you to understand this when you're trading or as a trader, why it's essential to your trade selection. Okay, so utilizing correlation and divergence is essential to your trade selection. So now the thing about this concept is you can apply this to the higher time frames to understand. You can basically use this to measure the strength of an asset class. Okay, so it could be any asset class. So what the concept I'm about to teach you applies to all asset classes. So both currencies, commodities, metals, bonds, stocks. It applies to all of them. Okay, so you can apply this to the larger time frames like monthly, weekly, or the daily. So when you're applying this concept I'm about to teach you to larger time frames, you need to understand that you're using this for long-term trends. But you can also still apply this to the smaller time frames like the 1 hour, the 4 hour, the 15 minute. And when you're applying these to the smaller time frames, you need to understand that you're looking at smaller price swings. Okay, so basically what we're going to focus on today is institutional market structure. We're going to look at the analysis of correlated assets or the relationship of conversely correlated assets. The purpose is to determine what smart money is accumulating or distributing. So, our goal for this lesson is to understand what asset class smart money is accumulating, if they're accumulating in an asset class, and how to identify when smart money is accumulating in an asset class, or if they're distributing in an asset class, and when to identify if smart money is distributing in an asset class. So currencies are easy to analyze with institutional market structure with the DXY. Every price swing should be studied to determine if market symmetry confirms it. So what we're going to do, this lesson is going to be more of price action study than theory. Okay, so we're going to revisit this, and then hopefully when I'm done with the video, and hopefully I've communicated something to you, I've communicated the concept to you, then you can then go practice this on your own. So what we're looking at institutional market structure now. Okay, what we want to take note of. Okay, the terminologies we want to consider is the benchmark, uh, the leadership, the sympathetic. Okay, so and also correlating asset classes. So now, what is the benchmark? So the benchmark is the currency or the asset class that other asset classes are measured against. Oftentimes, the benchmark is going to be the DXY for major currencies. So any currency that is a major currency, so major currency is a currency that has US dollar pegged with it. So any currency that is a major currency is a as a US dollar pair, base pair, code pair, and that is related to the DXY. So the DXY is a benchmark for most currencies, nearly all currencies. Okay, so DXY is a benchmark for all asset classes, being metals, gold, yeah, so stocks, commodities, all of them. The DXY is the benchmark. Now, if we want to look at euro or British pound pairs, we can class the euro pound as a benchmark for the strength or weakness of euro slash British pound pairs. Okay, so now let's consider the benchmark. So now let's say for example we there's an higher time for support on the DXY and we want to see price find support at that level. So it could be a daily bullish order block. Price is retracing on the DXY. Want to see price find support at that level, and price gets to that level, that time for support, makes higher lows, right? Then trades higher. Okay, that shows that institutional sponsorship we talked about in the previous webinar that just responds away from that higher time frame support. Now, if we're looking at the DXY making higher swing lows, right, we want to go check the foreign currencies for them to make comparative lower swing lows, right? So now let's say, for example, we go into two correlated asset classes. So in this example, we have SZD US dollar and Aussie US dollar. So if the DXY is making higher highs, if the DXY is making higher lows off a support level, we definitely want to see the foreign currencies make lower highs off a resistance level, right? Off a correlating resistance level. But now, if we see the DXY making higher lows off a support level, we see New Zealand dollar making lower highs off a resistance level, but Aussie is making higher highs off a resistance level. That shows that New Zealand dollar is the leadership market, and this is the asset class under bearish accumulation. Okay, so the institutions are accumulating this currency by that comparative lower highs in that currency. Okay, while this is under distribution, which is Aussie. So then the currency under accumulation becomes the leadership market, and that which is showing strength against the XY strength becomes the sympathetic market. It's going to eventually get in sync with this market. Okay, so if the XY is bullish, foreign currencies won't maintain that bullishness for a long time. So eventually you're going to have to go bearish. So this becomes the leadership market, and this becomes the sympathetic market and price. Um, so now, excuse me, when you see setups like this, or you want to select the currency under accumulation. So we're seeing the DXY bounce off our time to support level, and we're seeing New Zealand dollar show that comparative lower highs. Okay, and we're seeing this making our highs. Okay, we don't want to see this show strength against the XY strength. So if the XY is very strong, we want to select the currency that shows weakness. So we want to select weaker of the currency. So the currency making lower highs shows weakness versus the currency making higher highs. So that currency making lower highs when the DXY or the benchmark is bullish becomes a leadership, and the other one making higher highs when the benchmark is bullish becomes sympathetic. Okay, so this is how we determine the leadership market and sympathetic market. Okay, so this is just an example, right, for the benchmark. So this can also be applied to, let's say, for example, we have higher time frame support on a benchmark, which is the DXY. Okay, and as price trades down to the higher time frame support, we have kind of like a breaker on the DXY. So there's a breaker, there's a false swing low prior to the higher time frame support. Price drops down, runs out the stops underneath the swing low, and then rallies higher. Okay, and then we then go check the foreign currencies. So now let's say, for example, we have two of this. We're going to say one is British pound, GBP, US dollar. Let's make this all caps. So one of them is the British pound, US dollar, and the other is Euro, US dollar. Okay. So we see this bounces off higher time frame support level, and whilst this was making lower lows, this made lower highs. Okay, and this made IRs in line with the DXY. Now, what currency is showing? Oh, what currency is under accumulation from this? Okay, so what currency is under accumulation from this? And what currency is being distributed from this? So we're going to call this the benchmark, which of course is the DXY. Benchmark DXY. Okay, so this currency is under accumulation, because we want to see the XY go bullish. If we want to see the XY go bullish, we want to see foreign currencies go bearish. But now, prior to this going bullish off an higher time frame support level, this was showing a failure to go above the last swing, guys. So this was showing a failure swing. So that means that British pound US dollar was under a bearish accumulation. Okay, that becomes the leadership market for euro dollar, because euro dollar is eventually going to get bearish once the XY goes bullish, but it's going to get bearish in sync with the British pound US dollar. So this becomes the leadership. That becomes the leadership for foreign currency pairs, and this becomes the sympathetic or the synthetic. So I'm going to just write sympathetic for foreign currency pairs. Okay, so that shows that this is under accumulation to go short versus this. So sells will be more ideal in the leadership market against the sympathetic market. Again, the concept I'm teaching, you can apply this to the smaller time frames, 5 minute, 1 minute, 1 hour, 4 hour, daily, weekly, monthly. So you can apply it to all time frames. So that applies. Okay, so now this is all bullish examples. Now let's look at bearish examples. Okay, so let's say there's an higher time frame resistance point here. Could be a weekly mitigation block. All right, and we have the DXY bounces off this higher time frame support level, drops down, makes a failure swing, drops lower. Okay, and then we go in and look at foreign currencies. Excuse that notification. So we go in and check foreign currencies, and we see this is the benchmark DXY again, of course. Or let's say this is so this is the benchmark. So we see this drop down, go up, go up. Then we'll also check this, okay, and this drops down. So let me check real quick if I'm actually recording this. Let's see if this is actually being recorded. So then I have to. Okay, so we're recording. Yeah. So now, if we look at this, right, the benchmark, you can see that off the size time frame resistance level, this is making lower highs, right, and this is making lower lows. This foreign currency making lower lows, and this is making higher lows. Okay, so let's do a correlated asset class. So this is benchmark. Oh yeah, so we know this is benchmark. So this is DXY, of course. And then let's see, this is let's say this is gold now. This is gold, and this is silver. Correlated currency asset classes. You're both metals, so silver. All right, so we're seeing gold now make lower lows of the higher time frame support level, and silver is making higher lows. So now I'm gonna ask you. I'm gonna give you a moment to answer this question. So, what currency is under bullish accumulation, and what currency thus is the leadership market, and what currency is the synthetic market? So, I'm going to give you a couple seconds to answer this. All right. So, if you said this was the leadership market, you would have been wrong. This is the leadership market. Silver, because whilst the DXY was showing comparative lower lows to go bearish, this was under the bullish accumulation. Again, if the benchmark is bearish, you want to see the underlying or the other currency go bullish. So we're looking for the currency that has the most strength. So whilst the DXY was making lower highs, the foreign currency should be making higher lows. If the XY is making lower highs and one of the foreign currencies, for example, metal, gold, is making lower low, that shows that this is not under a bullish accumulation. So thus, this is eventually going to get in sync with a bearish DXY, but then it's going to follow the leadership market, which is going to be silver. So thus, silver becomes the currency under bullish accumulation, and is thus the leadership market. So silver becomes the leadership market, and gold becomes the sympathetic market. Okay, so that becomes the sympathetic market. This becomes the leadership market, and then you're gonna see that this is a currency you want to go long in, because this is the currency that's gonna have less spikes to the downside. It's gonna be easier to trade. I'm gonna show you an example shortly. So it's gonna be easier to trade. So that's the currency you wanna go long in. All right, so sorry, just noise in the background. There's a few friends over in my other room, so they're I don't know, the music is kind of loud. So now sympathetic market, leadership market, this goes long. We can also use the same example for this. Now let's say, for example, uh, we have an higher time frame resistance level on the DXY for bearish example. examples, excuse me, and we see the XY approach that with a breaker price, okay, the benchmark, okay, and this year foreign currencies, foreign currency, excuse me, does this failure swing rather than breaker, and this other one. No, let's actually do this. Let's make this more spicy. We're gonna make this more spicy. So we're gonna make this more spicy. Huh? So now this is the benchmark DXY, of course. Then we have a resistance here, and this makes lower eyes, whilst the XL is making higher eyes. So this makes a figure swing to the downside, and then begins to drop. All right, and then this other one makes the same as the benchmark. The breaker setup, short semi, it runs above that short semi, drops down, back to the negation block, drops down. So now, what currency, if this is the DXY, which of these two is the leadership and is the market? So which is under bearish accumulation? Okay. Okay. Sorry for that. So now I'm gonna give you a moment to find out which of this is the leadership and which is the synthetic. So one of them is actually under bearish accumulation. So I'm gonna give you a couple seconds and then we'll get into this. Okay, so if you guessed this as the leadership market, you would be correct. Okay, so USD CAD is going to be the leadership market because if we are looking for a BRSDXY, which is the benchmark, and we want to compare this with the two underlying currencies which are correlated. Again, when you're comparing the currencies, they must be correlated. Okay, if you're comparing different currencies, they should be correlated. So the only difference between USD CAD, USD for example, versus gold and silver and GU and euro dollar is that the US dollar here is the base pair, unlike uh, the base pair here. So unlike euro dollar and British pound US dollar. So DXY, we understand that this is an higher time frame resistance level. It could be a weekly bearish shadow block. And so we want to see bearishness off that level. Okay, so seeing this, expecting weakness, we're looking for that currency that is showing bearish accumulation. And you can see USD CAD is a currency that's actually weaker because while this was making higher highs to get into a resistance level and then it dropped lower, this was making lower highs a failure swing, showing that bearish accumulation by the institutions. So this is very important in trade selection and ferreting out really easy setups. So this helps you spread out very, very, very easy setups. So now we're going to look at a couple of examples, and we're going to compare this with. We're going to look at some examples on this. So we could do. So I'm literally just gonna go into my charts and just look for any random example. So this is Asia to this is between Asia session to London Open session. So let's see if we are one of the foreign currencies. So we're looking at a lower high off an higher time frame support level. So let's go to the 4 hour time frame. This is actually kind of messy though. Okay, so we do have an higher time frame support level. in form of this bearish candle prior to downward. That becomes a bearish order block. So that's a nice time frame level. We've ascertained that, and just this lower eyes of that 4-hour bearish order block. So now let's look at what the foreign currencies are doing. So between 1:30 GMT AM to 7:30 GMT AM, the XL is making lower highs. And let's go look at what British pound US dollar was doing between 1:30 to 7:30. Huh? So whilst the XL is making lower highs, British pound US dollar is making lower lows. So remember, the XY is the benchmark, and British pound US dollar is on the line. So we want to see now. Just by looking at this before we go look at euro dollar, is this going to be the benchmark or the sympathetic? If this is making lower lows, while ZX was making lower highs, then we go look at the euro dollar making higher lows. That means euro dollar was under bullish accumulation and not pretty strong US dollar. And you can see the result of this. Again, you see why this is actually important in trade selection? Because this was making higher lows 1:30 to 7:30. This is making higher lows. Now look at the reaction. So if you actually traded longs on your dollar, look how profitable you would have been. Right, you would have been profitable 70, 72 pips if you went in longs on your dollar. Now go look at British pound US dollar and see what you would have actually you're actually going to suck out the British pound US dollar because we just went up a couple of pips and then dropped. But look at euro, euro just kept going up. So whilst DXL was under bearish accumulation, showing lower highs of an higher time frame support level where we can expect or anticipate bearishness, right? We then went and looked at what foreign currency was making higher lows. This was making higher lows, showing strength. So this is the leadership market. Again, you want to trade the leadership market because that's where the signals are going to form. That's where you're going to get the trade edges that forms. Okay, it's only going to form off the leadership market. But if you traded the synthetic market, like British pound US dollar, you would have had a loss, a huge loss for that matter. Okay, so this is this low. We retrace back down. New York session, New York Open. If you bought New York Open, you would have still been profitable. But if you went into buy on the synthetic market, which is British pound US dollar, New York Open, which is 1530. Yeah. So if you bought here, you would have gone stop down most likely, or you would have just been frustrated. Okay. So this is why it's essential to utilize the leisure market and the synthetic market to pair out the most ideal trading opportunities in price. So the same thing I did on smaller time frame is also the same thing you can do on the larger time frames. Okay. So now let's look at an example. Let's see. Okay, so we're actually going to look at, let's see if this actually formed 15th of May to 29th of June, if it's something that actually formed there. 15th of May. Huh? 15th of May, 25th of June. Okay, so this, 15th of May. Let's see if there's actually something here. 15th of May, 25th of June. Okay, there's really nothing much here. Okay, we can still use this as an example. Alright, so between the 15th of May to 25th of June, your dollar was making really steeper highs in this. You can see how steep these arrows to the outside. And you can see DXL is making really steeper lows in this. You can see how steep this was the downside. At the same time, look how shallow that of British pound US dollar was. Okay, it was not as steep as euro dollar. And look at all of the retracements, the wicks, and all the consolidations. So this uptrend was less smooth than euro dollar's uptrend. Okay, so I want you to look at that. Now look at euro dollar. Euro dollar just went straight up, just kept going up, parabolic price movement compared to that of British pound, US dollar. And this was just more choppiness, before it went to the upside. Okay, so that is showing you that the accumulation is actually under the euro dollar, which is why you're seeing a more smoother price action versus the British pound US dollar. So again, this can also be applied to the higher time frames. So let's go look at one last example, and then we're gonna. Okay, so let's look at between March 19th to 3rd of May 19th. Okay, 03 May, 12th of March. So we're seeing British pound US dollar make lower highs. Okay, let's see if the XY was doing the same thing. 12th of March 2019 to 09 May. So this is 12th of March to 09. Oh, this is actually kind of weird. So this is actually a low. So this is actually 20th of March. Let's look at this real quick. Okay, so now let's look at the eyes between 1st of March to 20th of March. Okay, this is 1st of March. Oh, sorry, actually 28th of February to 21st of March. 28th February to 21st of March. We got DXY. 28th of February. Let's see, 28th of February to 21st of March. All right, so this was actually making lower lows. So that made lower lows. And let's look at what British pound was actually doing. So 28th of February to 21st of March. Okay, so this is making kind of equalize slightly higher. Okay, so now let's get the result from this. Look at the result from this. Look at this drop down. Let's compare that to that of euro dollar. Okay, and you can see that euro dollar failed to take out its low, swing low, because it made sharply higher high. So if we're expecting the DXY to go bullish, we're looking at the foreign currency that is showing the willingness to go bearish. So whilst DXY was making lower lows to get into a support level to bounce higher, this was making higher highs. Whilst this was making, now this made higher highs, but failed to take out its low until a while later. But now let's go look at British pound US dollar. Okay, let's see what this actually did. And now you can see the results. This actually took out its low, then kept on dropping. So you can see the result from this. Huge drop to the downside. Okay, huge drop to the downside. Between that same period all the way down to 27th of August. Okay, 27th of August, from that period all the way down to 27th of August, you can see that really insane drop there. But now, if you compare that to euro dollar, you can see this still made really choppy price action movement, okay? Because the bearish accumulation was actually under British pound US dollar and not euro dollar. because this was making higher highs, while this was making slightly higher high. It was kind of like equalized. Okay, if you remove this week, if you remove this week, it's kind of like equalized, even lower highs if you from it this week. So this is where the bearish accumulation was uh, inside of breach round. And so I just showed you an example of using the small time frames to determine smaller price range, and also using the larger time frames to understand what currency is actually under accumulation or distribution. So hopefully this webinar was insightful. This lesson was insightful to you all. So we've got two more lessons to round up our schedule. So the next lesson is going to be head and shoulders, market entry traps. So hopefully you enjoy this lesson. Excuse me. I'll see you all in the next lesson.